Welcome to today's Employment Standards mini overview on general holidays and holiday pay. Thank you for joining us. Before we begin, please be aware of our disclaimer and copyright notice. I'll give you a moment to read it. Basically, we've made every effort to give you the correct information, but if there are any discrepancies between this presentation and the Employment Standards Code, the code will prevail. Please note the copyright for this presentation belongs to the Government of Alberta. Alberta has 9 general holidays, which are shown on the slide. General holidays are commonly observed days of rest, sometimes called statutory holidays. There are specific requirements to be met for employees to receive a paid day off for these holidays, and we'll go through the eligibility requirements in the next slide. There are some holidays listed here that are often recognized as a greater benefit, often called optional holidays. If an employer agrees to designate additional general holidays for their employees, all employment standards rules related to general holiday pay apply for those additional holidays. Employees should be made aware of any policies the employer has surrounding general holidays or alternate days given in lieu. Now we are looking at general holiday pay eligibility. There are a few eligibility steps for entitlement to average daily wage. First, an employee has to have worked at least 30 workdays in the previous 12 months with the same employer. Second, employees must meet what is known as the 5 of 9 rule. The rule helps to determine if the day of the week that the general holiday fell on was a regular workday for the employee. When an employee works an irregular schedule, they must have worked at least 5 of 9 days of the same day of the week the holiday fell on, immediately preceding the general holiday. If an employee has an irregular schedule, but has worked at least 5 of the previous 9 Mondays before Labor Day, for example, which always falls on a Monday, then Monday is considered the employee's regular day of work, and they've met another step for eligibility for average daily wage. If an employee has an irregular schedule and has not worked the last 5 of the previous 9 Mondays, then Monday is not their regular day of work, and they have missed a step for eligibility. But if they work on this holiday, they still may be eligible for 1.5 times their wage rate for all hours worked on that day. Third, the employee must not be absent without consent for the general holiday itself or the shift immediately before and immediately after. Here are the 2 options an employer may choose to calculate average daily wage. By dividing the total wages earned in the 4 weeks immediately preceding the general holiday by the number of days worked, or by dividing the total wages earned in the 4 weeks ending on the last day of the pay period immediately preceding the general holiday by the number of days worked in the same period of time. As with other rules, there are some exceptions and exemptions for general holiday pay. For additional details, please visit the Employment Standards website. If an eligible employee does not work on a general holiday, the employee is paid their average daily wage for that day. If an eligible employee works on the general holiday, employers have 2 options for paying out the general holiday pay. Option A is the employer pays 1.5 times the employee's wages for all hours worked on the general holiday, as well as the average daily wage. Option B is that employers can pay hours of work on the holiday as if it is a regular day of work and provide the employee with another workday off in the future and pay them average daily wage. This chart is for average daily wage eligibility for payment of earnings when not working on the general holiday. As stated, an employee must meet all 3 criteria in order to be eligible for pay for the general holiday. Employees must have worked at least 30 shifts prior to the general holiday, and the day on which the holiday falls should be a regular day of work for the employee. To build on this, for someone who regularly works Monday to Friday, they won't be eligible for any holidays that fall on a Saturday or Sunday. Finally, if an employee is absent, they must have consent for the absence from the employer. I'll give you a few moments here to review this slide before we move on to what happens when an employee works or doesn't work on a general holiday. For an employee who meets the eligibility in column 1 but not column 2, for example, a Tuesday to Friday employee is asked to work on a holiday Monday. Although they are not eligible for average daily wage since they never work Mondays, they are still eligible for general holiday pay of 1.5 times their wage rate for hours worked on that Monday. We'll talk about how general holiday pay is calculated and review options for payment on the next slide. Exceptions are listed in the regulation where there are different rules for certain sectors. For instance, construction employees receive 3.6% of their wages beginning on the first hour of work for general holiday pay. Farm and ranch employees would receive the day off and pay of 4.2% of their previous 4 weeks' earnings. Some employees are not entitled to general holiday pay at all. For additional details on these exemptions and exceptions, please visit the Employment Standards website. Here is an example of an employee who regularly works Monday through Thursday. Assuming that the employee meets the eligibility requirements of at least 30 work days in the previous 12 months with the same employer, they would be eligible to receive average daily wage for Monday in week 12. We do not need to review the 5 of 9 rule for this case, as the employee does not work an irregular schedule. We know they always work Mondays, and it appears they always work 8 hours on Monday. If the employee does not work, they are entitled to average daily wage of 8 hours, what they would regularly earn when working on a Monday. If the employee works, they could be eligible for average daily wage and 1.5 times their wage rate for all hours worked on this day. Or the employer may pay all regular pay and overtime, if applicable, as if the general holiday was a regular day, and choose to defer the average daily wage payment to the future and provide a day off with pay. Later on, we'll go through a few calculations on the amount of pay this employee would be entitled to with the different scenarios I just spoke about. In this scenario, their employee's regular schedule is Tuesday through Friday. The general holiday has fallen on a Monday, as most general holidays tend to do. Similar to the last scenario, we don't need to review the 5 of 9 rule for this employee, as they do not work on an irregular schedule. We know the employee never works Mondays. Even though the employee worked for this employer for at least 30 work days prior to the holiday, they do not typically work Mondays and therefore are not eligible to be paid for the holiday. If the employee does work, they will be entitled to 1.5 times the wage rate for all hours worked on that day, as long as they are not absent without consent for the general holiday itself, or the shift before, or the shift after the holiday. In this scenario, there is no option for the employer to pay regular wages and defer average daily wage payment. The only option is to pay the employee the 1.5 times the wage rate for all hours worked on the holiday. In this scenario, we look at a part-time casual employee to determine if they meet the eligibility requirements for general holiday pay. The employee shifts are irregular, as there doesn't appear to be a set pattern on when the employee works. With this type of employee, we must apply the 5 of 9 rule as an additional step to determine eligibility. The holiday in this case has fallen on a Monday on week 12. We must review the last 9 Mondays prior to the holiday to see how many Mondays the employee worked. As there are only 3 Mondays worked in the previous 9 weeks, Monday is not deemed to be a regular workday for this employee. If they do not work on Monday in the 12th week, they are not entitled to any pay for that day. However, if the same employee worked on the day, let's say 5 hours on Monday in week 12, although they are not eligible for average daily wage, they are eligible for general holiday pay at 1.5 times the wage rate for the 5 hours worked on the holiday. They are eligible for this because in this scenario, the employee worked at least 30 shifts with the employer in the previous 12 months. They are also not absent without consent. This payment is considered general holiday pay and is not used in the calculation for weekly overtime if applicable, as these hours are already paid out at 1.5 times the wage rate. On this slide, we'll demonstrate an average daily wage calculation for an eligible employee. Before we start, we note that Labor Day is on the Monday in week 10. We'll confirm that the 5 of 9 rule applies for this irregular schedule, as the employee worked at least 5 out of the last 9 Mondays prior to Labor Day. As mentioned previously, average daily wage is calculated in two possible ways. For this scenario, the employer has chosen to use the first option, which is the total wages earned in the 4 weeks immediately preceding the general holiday divided by the number of work days. Now let's look at the average daily wage calculation. Adding up the number of hours worked in the 4 bracketed weeks, we have 59 hours in total. We have 10 shifts in that time period, so we take 59 and divide it by 10. Our result is 5.9 hours worked on average per day. The employee would then be entitled to 5.9 hours of regular pay for not working on Labor Day. In the next slide, we'll review what happens to the calculation if they did work on Labor Day. Using the same example as the previous slide, let's do a calculation for general holiday pay when the eligible employee works on the general holiday and is entitled to average daily wage. From the previous slide, we know that the employee is entitled to 5.9 hours of average daily wage. In addition to this, the employee is called in and works for 6 hours on the general holiday. We have already calculated average daily wage, so we know that the employee is entitled to 5.9 hours at regular pay. Let's say the employee earns $20 per hour. Multiply $20 by 5.9 hours gives us $118 in total. For the 6 hours that the employee worked, they are also entitled to at least 1.5 times their regular wage rate for all hours worked on that day. We take $20, multiply it by 1.5 times, and gets $30 per hour. Then $30 per hour multiplied by the 6 hours worked is $180. We take the 118 average daily wage amount and add the pay for hours worked of $180. You'll get $298 in total earned for this employee. I'll give you a few quick moments to take a look at the math. There is an alternate way to pay general holiday in this scenario. Employers may choose the option only for employees who are entitled to average daily wage. The employer can choose to pay the 6 hours worked at the employee's regular wage rate. $20 is the regular wage rate multiplied by 6 is $120. The employee should receive the amount on their next pay. The average daily wage is still remaining. The employer must give the employee a day off in the future on a day that would normally be a work day for the employee and pay their average daily wage then. Now we'll review how bank general holidays are treated when there is a separation of employment. As mentioned in the previous slide and shown here as well, the employee should receive a day off in the future and get paid average daily wage. In this scenario, we know that amount is $118. Now, depending on if the employer terminates employment or if the employee quits, this bank general holiday is treated differently. First, let's look at what happens to general holiday pay when the employee is terminated. If you recall, the employee received their regular pay for working on Labor Day in September, so $120, already paid for the 6 hours of work. A lieu day was banked for the future with pending average daily wage payment. A few months later, in December, the employee gets terminated. They can no longer utilize the future day off, but the average daily wage payment for that day is still outstanding. Since the employer initiated the termination, they are required to pay the employee as if they chose the first option to pay general holiday pay. That is, time and a half for all hours worked on the holiday and average daily wage. We know the employee worked 6 hours on Labor Day, so $20 times 1.5 times 6 hours equals $180. This $180 is the same as the very first calculation we did, where all hours worked by an eligible employee on a general holiday is paid at 1.5 times the wage rate. However, $120 was already paid previously. So we take the amount owed, $180, subtract the $120 already paid, and the employer must pay another $60. Since the average daily wage of $118 is also outstanding, the employer has to pay that as well. $60 plus $118 is $178 payable on the employee's last paycheck. Now let's look at what happens when the employee quits. They already received $120, but since the employee quit, the employer is not obligated to make any adjustments to pay or pay anything other than the outstanding average daily wage of $118. These are the two things that could happen with banked average daily wage upon termination of employment. Okay, let's talk about some exceptions to the rules we've discussed that exist for specific industries. Construction workers have special rules in the regulation for how general holiday pay works. Without having to complete an eligibility period, they are entitled to 3.6% of their wages for general holiday pay. There is no requirement to give them additional pay for working on the general holidays. The general holiday pay must be paid before December 31st of each year or on the termination of the employment relationship if termination occurs during the year. However, most employers give general holiday pay to their construction workers each pay period. Farm and ranch workers also have special rules. If a farm and ranch employee doesn't work on the general holiday, then they get the day off and receive pay for the day, which is an average daily wage of 4.2% of their previous 4 weeks' earnings. If, however, farm and ranch employees are working on the general holiday, the day should be treated as a regular work day, so employees are paid their normal wage for each hour of work and additional pay of 4.2% of their wages. If the employer wishes to, they can give an extra day off that would normally be a work day. In the case of getting a lieu day off later, that day off should occur within 30 days or later if agreed to in writing. Also, for the 4.2% of wages that is paid, it should only be paid once. When a lieu day is given, that 4.2% should be given on the lieu day rather than the original general holiday. And that brings us to the end of our mini overview on general holidays and holiday pay. If you would like to learn more about various employment standards topics, such as the ones listed on the screen, please scan the QR code to be taken to our website. Also, if you have a question, wish to make a complaint, or submit an anonymous tip to employment standards, please scan the QR code on the screen or call our contact center at 1-877-427-3731. Thank you for viewing today's session on general holidays and holiday pay, and we hope that you have a pleasant day.